A trader must trade with the direction of the trend. The ADX indicator is one of the useful indicators to incorporate with trend trading strategies. Welcome. In this session we will learn the following: the components of the ADX indicator, the implications of indicator signals, trading strategies using the indicator, and practical trading tips using the concepts. ADX is part of the DMI indicator. We will discuss them together in this session. The ADX line in the DMI is exactly the same with the ADX indicator itself. It was developed by J. Wells Wilder in 1978. The formula for DMI and ADX is complicated and may take time to discuss. For simplicity of this session, we will focus on the signals and the actual uses of this indicator. DMI, or the Directional Movement Index, is composed of three lines that provide different signals. The plus DI line is used to indicate an uptrend. The minus DI line is used to indicate a downtrend. And the ADX line is used to measure the strength of the trend. The colors of each line may be changed according to one's preference. The DI lines indicate the trend direction. An uptrend may be signaled when the plus DI crosses above the minus DI. On the other hand, the minus DI line above the plus DI line signals downtrend. The intertwining of DI lines may signal retracement or sideways price movement, as shown here. The ADX line measures the strength of the trend. Here is the table that translates the descriptive equivalent of the ADX values. A line was placed at the 25 mark to make it easier to visualize when the price is going on an uptrend. The chart shows that the trend began when the ADX line reaches 25. The trend turns sideways when the ADX signal is below 25. The ADX only tells the strength of the trend and doesn't distinguish its direction. In this chart, we can see that the ADX rises with the trend, indicating a strong uptrend. The other chart here shows the ADX is also rising while the price is going down. Hence, the ADX indicates the presence of a strong downtrend. As the ADX peaks, it falls, indicating that the strong downtrend is weakening or changing in its momentum. ADX peaks may show the weakening of the momentum or change in trend. In this chart, the price shifts from uptrend to sideways after the ADX peaks. Another peak signaled a failure to build a momentum. Therefore, the price moved sideways, with the ADX signaling below 25. In this chart, the ADX peaked twice. The first peak is from the downtrend followed by retracement. As the ADX builds another momentum as shown by the red arrow, the succeeding ADX peak was from the continuation of the downtrend, followed by trend reversal. The ADX below the DI lines indicates that the price is on sideways. Also notice that the DI lines are interlacing. We can see in this chart that the price moved sideways while the ADX stays below the DI lines. ADX may weaken as the price peaks, indicating the possible topping of the price in an uptrend. Here, we can see that the price made highs after highs while the ADX signaled lower peaks. This means that the strength of the trend is weakening, a characteristic when the price is on distribution phase. Trade long when the plus DI line is above the minus DI line, as it signals an uptrend. For added conviction, check the ADX, as it should be pointing up to indicate the building of the momentum. Go short if the minus DI line is above the plus DI line, as it signals a downtrend. For added conviction, also check the ADX if it is pointing up, which indicates the building of the momentum. The best signal for entry is when the ADX crosses above whichever DI line is lower. ADX gives better signal when it stays long beneath the DI lines before the crossover. In this example, ADX crosses above the minus DI, which is the lower among the DI lines. The ADX must also point up while crossing the DI line to indicate the buildup of the momentum. ADX and DMI are not standalone indicators. Like any other indicators, ADX and DMI are also prone to false signals. In this example, the ADX signaled an uptrend, but failed to build up the momentum. Therefore, incorporate them with other technical tools to increase the odds of profitable trading. DMI relies on averages of the past prices and therefore is a lagging indicator. ADX and DMI work well with other trend-following strategies, such as trading with moving averages. Depending on one's trading preference, DMI and ADX may be used along with other technical indicators. In this example, the price crosses above the 20-day moving average to indicate an uptrend. ADX adds more conviction to the trade when it signaled momentum build-up as it points up. And finally, remember that trading is not perfect, so always manage the risk by carefully planning ahead the trade. Always consider the portfolio allocation size. And also plan your stop loss before the trade. If you find this video helpful, don't forget to like and subscribe.